think there's an interesting bifurcation going on. So the rich are definitely getting richer and the poor are getting poorer. Now that's a pretty broad statement, but let me explain. So what you're seeing is, if you're AB demographic and you've got some property, you've got a few shares, and maybe you've even got your own business, you're actually feeling pretty good at the moment. You've got a bit of debt, interest rates at an all-time low, and your asset prices have gone up. If you're in a white-collar, blue-collar job, and you spend most of your disposable income on non-discretionary items, where inflation's pretty high, you've got some job insecurity, and you're not feeling so good. Now we're seeing this play out in a number of different ways. Some of the symptoms we've noticed it in is, for instance, there's a Crown casino, has a big gaming floor. The pokie machines are typically aimed at the blue-collar, white-collar demographics, whereas your table games are aimed at your upper-income demographics. And you're seeing a real difference in the revenue growth. In fact, the one's strongly positive and the other one's quite negative. Companies that focus on these income groups, therefore solely either A, B or C, D, have got quite diverse revenue paths and are seeing very different environments. And this may be one of the reasons why you're getting quite a polarised investment community, in that some think the world's going well and others think it's quite tough. And the facet I often get thrown back at me is, you go around top end of town restaurants, they're all full. Or new car sales, particularly luxury end, are doing quite well. So some of the examples of how you can play this is, the Reject Shop, not doing so well. Target, not doing, it's got its own structural issues, but also not doing that well. Even Big W has been struggling to some extent. On the other hand, and probably the purest play is, if you're a wealth manager, you've seen huge inflows as people with surplus assets that are sitting in cash. Okay, there's a double whammy there. One hand, they've got lots of cash and they're feeling wealthier, so they feel they can take more risk and go back into equities. But also, obviously, interest rates are not offering that much. So wealth managers are seeing very strong inflows. So your perpetuals, your IOOFs, your platinums, etc. And so it's brought out quite an interesting theme that we've been focusing on.